today is Sean Wade, the CEO of Power Metal Resources, to answer some questions about the MineStarters tokenization model that the company announced a few weeks ago. Well, Sean, thank you for your time. How are you?
I'm very well, Mark. Thank you. And it's lovely to see you again. And thank you very much for having me on.
Yeah, no worries. This is a bit of nice news from the company, a bit different. But first of all, I know you've had some questions coming in. So how does this MST token value appreciation benefit POW and the Power Metal shareholders?
Well, that's a great question. And let me just to be clear, we announced this a week ago, and it's obviously, look, it's quite different in many respects to what we've done before. It's a very different kind of asset. And obviously, it's a very different kind of financing model, and that's really the point. What we're trying to do with MineStarters is to unlock a bigger pool of capital, and our ambition with this is very high. We think this could really reshape early stage exploration financing, and that's why we're doing it. We've got early mover advantage in a very, very exciting space and in a great asset with some very, very good people, and we think that we can make a great success out of this, and the value of this asset will be of great benefit to Power Metal shareholders, and that's really the specific point. So the reason I asked to see you was because one of our shareholders, we have some very, very clued up shareholders who understand their mining extremely well, and they obviously they hold us to account and they like to know what we're doing, and obviously a lot of them have asked questions specifically about this and about the model. And I got some really excellent questions from one shareholder in particular, and I thought that it would be a good opportunity to address those to the wider audience, because I'm sure that those are questions that have occurred to other people. So your question was, how does the token value appreciation benefit the Power Metal shareholders? So to be clear, we are going to own up to 49% of MineStarters, which is an entity in its own right, with its own board and management team, and we're going to be a shareholder in it. Now, the first thing to get across to shareholders is that I see this as an asset play, as opposed to a revenue generating play for Power Metal. In other words, I'm not expecting this to be paying our G&A costs, and I'm not expecting, at least not in the initial phase, at least, a dividend, to come from MineStarters to Power Metal, because there are, a lot of priorities for that business to grow that business. So how does it benefit me as a Power Metal shareholder? Well, the essential point here is that we've bought equity in a platform that is in itself is a revenue generating, tech enabled finance machine. Okay, so think of it as the sort of the engine behind the issuance of these real-world asset tokens. So initially that would be the MineStarters token, which the sale of which into the market will fund a secure treasury from which funds will be dispersed to early-stage mining projects. In the ordinary way, well, not actually in the ordinary way, they'll be via blockchain-based smart contracts. But when I say the ordinary way, I mean a project owner comes to us, says that he would like funding. We have a look at it through our technical committee, which is led by our founder, Marcel Nally. If we decide we want to invest, the funds are dispersed from our secure treasury to the project. The project then, obviously, hopefully succeeds. And what does success look like? Royalties coming back to MineStarters, streaming rights, obviously increased value of equity. People, obviously, all of your viewers will know obviously about GMET and FDR and Fermi and the other things that we do. And what we're talking about there obviously is what we hope over time are appreciating assets, delivering real value to shareholders. So that's the same thing in that sense. So the treasury issues the token to the token holder, who might be, well, it will be obviously a crypto investor, but it might be a retail investor, might be an institutional investor. The cash from the sale of that, what's called an ICO, which is an initial coin offering, goes into the treasury, and from there the funds get dispersed. So that's one thing. That's one way that business will build value, and obviously that can be measured over time. You can say, well, we have this asset which we invested X million at this particular point. It's now crystallized and valued here. So exactly the same as you would see with the Power Metal model. But the other thing is that MineStarters itself is in itself also a revenue generator. So you would have platform revenue, you would have deal fees, and also you would have upside performance from retained tokens in the treasury. Okay, so let's put it, and I'm going to put this completely illustratively, okay, because we're not at the moment. I'm not giving out a lot of numbers on size of the market, size of the token holdings, how much we're going to raise, all that kind of stuff, because I don't really want to set expectations in the market where we haven't obviously done that raise. Suffice to say that our ambitions are very high here, but I don't really want to get hung up on numbers. So let's just put it illustratively, okay? Let's imagine that there are 100 million tokens in issue, and we go forward with a raise, with a token round. A certain number of those will be sold into the market. Let's say, for the purely sake of argument, we do 20%. Okay, so there would be then, on that basis, and again illustratively, because some tokens will go in different directions, but let's say there are 80 tokens in the treasury remaining, and there are 20 tokens in the market. That token is issued at £1. It goes to £3, and that's obviously very good news for the token holder. Now, that increase doesn't obviously flow to us; it flows to the person who bought the token. We've got the initial £1, okay, and we then go and disperse that pound into our projects. However, given that the token has now gone from £1 to £3, and this business looks like it's working, we're getting very good demand to onboard new projects. Then project number 2 comes along with the same basis. We'd like to fund this. It goes to the technical committee, but we've now got a price in the market against which we can issue another round of tokens. So out from the treasury come the next, say, 10 or 20 million tokens, and they're now being sold at £3 or £4. So what you've got is you're effectively acquiring projects with a higher rating, if you will. Okay, so there's it's immediately enhancing, and also it's enhancing the remaining tokens in the treasury. So one of the clever aspects, and one of the things that Mark has obviously put a lot of work into here, has been the balance of how many tokens are retained and how many tokens are obviously sold in the market, and how the balance fits between those and the projects. Now, the other thing is, so sorry, this is going on a little bit. I hope people are following, but another way to look at it is if you imagine that, and this is maybe a way that a lot of people would see it. Imagine that I've announced that we've invested into an ETF issuer. So a thing called MineStarters is an ETF, and it's offering what is effectively, well, the same as this is fractional ownership, but via a share or units, and the cash that's received from the sale of those units to the market is going to fund the projects. That's the same thing, but we own equity in the ETF issuer, not the ETF unit. I mean, I hope that's clear. So we own MineStarters, the business that is generating these tokens, the projects, and obviously those deal and platform revenues I talked about, rather than the tokens themselves. Okay, so I hope that's clear. So what I anticipate is that quite rapidly we will be onboarding projects, dispersing cash, and that will create a self-sustaining business model whereby it won't require further funding. This stands on its own 2 feet, really. Well, certainly our model suggests, very quickly, and it will, assuming that there is sufficient demand for the tokens, which we believe obviously there is, that this will start making a very profitable return very quickly, and that will be reflected in the asset value to us. Okay,
and then in terms of funding, I think in terms of ongoing funding, I guess it's at the project level for the asset that you've acquired. How is that handled?
So you mean the ongoing? Okay, so this is where the funding comes from the treasury out into the market. So that's more or less kind of what we've been talking about. The thing to add to that is the treasury grows over time. Okay, and a lot of the profits which as I said, will come from crystallization events, cash coming back in, GMET type trades. Obviously, royalties and streams, so cash revenue comes back into the token treasury, and that is then obviously reinvested. So it's self-sustained. But the other thing, and I think we put this in our materials, is that when you talk about tokenomics, okay, it's a bit of a new word. It's certainly a new word for me. That suggests a whole number of things, including obviously, but what it means is the management of the token itself. So what that means in practice is the issuance of it, but it also means what is effectively the buyback, what we call the burn of a token. So essentially, there are, let's say, 50 million in circulation. They've funded, let's say, 10 projects. I mean, we're just making numbers up. A project or some projects have come to fruition, have returned cash to us, and therefore what we would potentially seek to do is to then buy back and destroy those tokens in the same way as you would do with a share buyback, thus continuing the scarcity of the token. And what you can't do with these things, and we could debate forever cryptocurrencies whether the virtues of Bitcoin versus stable coin or meme coins or whatever, is you've got to avoid dilution. Otherwise, you destroy a lot of value. So we are seeking to what tokenomics means is the issuance, the circular nature of the token's life cycle, which ends up with it getting burned and destroyed. So that's very important. So as a power metal shareholder, how do I see value? You see value in the value of MineStarters going up and successfully executing its model. You're going to see performance of the tokens in the MineStarters owned treasury, which by extension, obviously, we own a bit of. Okay. We own 49% of this company, which has X amount of dollars in its treasury. Well, we own Y amount of dollars of that, clearly. You will also see it in terms of the incubation and successful crystallization of the assets themselves, which, as everybody knows, is what we are seeking to do. Now, why are we doing this as opposed to doing it ourselves, as it were, in terms of why change the business model in this way? Well, first of all, we're not changing the business model. This is exactly what we do, only we are now adding a fintech dimension to what we do. But we are seeking, obviously, to get involved with much bigger and much better and much higher quality projects. Obviously, I believe that the projects we've got are obviously naturally very high quality, but they are equally, in many cases, necessarily very early stage. Because, I've got a 20 million market cap. So, and I spend hundreds of thousands as opposed to tens of millions when I come to do exploration. Now, this will up our game significantly. This is enormously scalable. We've got, there's I don't know, 3 or 4 or 5 of us on the board, and obviously Ian's tech team, but there's not very many people. That same group can handle, almost, well, not infinite, obviously, but an enormous number of projects because the tokenomic life cycle is the same. Now, another thing to add here is people will be scratching their head saying, "Well, yeah, but hang on, you've issued this token, you've burned some of them. I'm still not clear." Think of the token as, let's imagine it's a one project token, and we say, right, we've got this fantastic, copper asset, for example, in a certain part of Africa. We're issuing a token, so we're tokenizing that asset, which is what this is. Okay, that is going to produce a return. That's going to come back to us, and then we're going to kill that token. So, and everyone said, okay, I've got that. But then separately over here, I've got people saying, well, actually, your initial token, which actually had a handful of projects in it, in different commodities and in different geographies, was a nice broad spread portfolio approach to curated assets. That's what you said you were going to do, and that's been successfully delivered. But I'm really excited about uranium specifically, or rare earths, or germanium, or antimony, or some of these things that are critical to the world, but which are difficult to get hold of. And I would like to tokenize those, because the virtue of tokenization versus the traditional equity route is that you've got a huge, highly liquid market. These things are traded 24/7. They've got very, very wide appeal. We believe, and we've given numbers already on the growth in that market, but it's absolutely growing like mad. So this is where the future of funding is coming from. Okay. And there's nothing stopping us issuing another token to do a different job. You could have any number of them. There's not just going to be one of them. There's going to be potentially a lot.
Okay, that makes sense. So it's tokenization of commodities basically, and projects with real value, real use. The final question I think you were sent was during the ICO, will Powell be putting money into the initial coin offering?
Yes. Now that's a really that's an extremely good question. I'm very pleased that I was asked that. Now that is not the plan. Okay. What I really want to stress this, because there has been obviously this fantastic run and a great deal of excitement over the Bitcoin treasury companies and the other alternative coin treasury companies. And, a lot of my friends are involved in those, and some of them have been enormously successful. And I personally, I'm a big fan. I believe in the concept, but that is not what we are doing. Okay, we are not trying to mimic the treasury model, which would be suggesting, for instance, I've made this big return on my Guardian Metal shares. Now what am I going to do? I'm going to plonk it all into this treasury asset and hope that goes up over time. That isn't what we're going to do. Okay, now now that doesn't mean to say we wouldn't maybe own some coins. I mean, it may be sensible. We may have an opportunity in an earlier round, or we may want to support a round of financing. But I don't want people to think, right, he's got however much 15, 16, 17 million, whatever, and he's going to chuck it all into this thing which I don't understand and which may work, may not. That's not what we're going to do. We're going to carry on running our business. What I've committed to this is an initial spend of £1 million, which will get us to a point where we have a minimum viable product, where we have a number of projects onboarded, where we will have, we'll have tested the concept, we'll have a regulated exchange, we'll have, all of the kit you need to do this. And then I have the opportunity, once those things have been achieved, if I wish to take it, which I'm pretty certain I will, to exercise my second option for a further £2 million to then go to up to 49% of the equity. Now, I'm anticipating, obviously, that I'm going to do that. But what am I really putting at risk here? If I fall flat on my face, I will have lost £1 million. Now, whilst we all agree that's a substantial amount of money, we're talking about mining exploration here, where, let's be perfectly honest, it's not uncommon to spend those kind of sums and not really get, a great result. Okay. Now, I'm not suggesting that we do these things, without careful oversight and so on, but we also understand what the risks are in our sector. Okay. So, what am I putting at risk of your money at this point? I'm putting £1 million at risk. Now, I'm pretty confident that when we get to the point where we pull the trigger on the second option, we will have a very high degree of confidence in the outlook for the business, the size of the ICO, the quality of the projects we're onboarding. And I'm anticipating, quite honestly, that I will be in a very happy position of being able to buy what will be effectively some cheap equity in something that is already succeeding. That's the way I'm looking at this. Okay, so people will say, well, you're putting £3 million at risk. I'm pretty certain I'm going to know if this is working or not after £1 million. Okay, so I'm not saying it's not without risk. Clearly, I mean, there are a lot of risks inherent in our sector generally, but I've got a high degree of confidence in the people that we are working with. I've got a very high degree of confidence that we as Power Metal have a very strong synergy with MineStarters and can form the bridge between the traditional financing backdrop that we're all in, which I've said to you many times, is tough, it's expensive, and it's very difficult, FDR, etc. Into a new pool of capital, which we think is ripe for real world asset tokenization, and where we think that there will be a very, very high demand for this, and where I think we're going to make this a fantastic success. So, to leave shareholders with the thought is, what I'm hoping to do for you is to invest some of your cash into a very fast growth, high quality asset that is, yes, it's a little bit different, but actually it is an extension of our current model. Okay, it is not. I'm not doing something really weird in another sector. And the other thing, by the way, I should also add, is that prior to the announcement, we obviously had to go a few rounds with, the stock exchange and obviously advisors. And if they considered an aim, quite rightly, I'm very strict about this, if they considered that we were changing our business, they would not have let us do this. So we've made a submission to them. We've discussed it with them. our Nomad did a lot of work on our behalf, and they're very happy that this is an extension of what we're currently doing.
Okay, good. Well, Sean, good luck with that. Looking forward to seeing how it goes as you approach that second option point. But for now, thank you very much for your time.
Thank you. And just sorry, Mark, just one very last thing, if you don't mind. I hope that's helped people. If you still have specific questions about the model or whatever, by all means, please send me an email. So info@powermetalresources.com. You can always get hold of me. Very happy to engage one-on-one, but I just hope that has given a kind of broader picture. So thanks very much for your time, and I'll see you soon.
Thank you, Sean.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.